Welcome, everyone. Welcome to this Thursday's happy half hour. Hey, Sam, this is a special day. What's special about today?
It's
It is.
Veterans Day.
It's Veterans Day.
Yes,
This
it
is
is.
my daughter, Sam Shakavage. If you've just come here for the first time, I'm David Shakavage, president of Carolina Retirement Planners. Sam is my partner in the business. And now for 71 weeks, we have come to you every Thursday at 4:30. And as today, we're going to talk about Congress targeting IRAs and some of the proposed legislation. But before we get to that, we have another person we want to introduce. Behind the scenes is Amy. And Amy is the one that makes this all work, somehow feeds Zoom into Facebook, and she's our director of client fund. And say hi, everyone. And now, what are you what is everyone drinking today? We always like to know what everyone is enjoying here.
You know what? I lost track of time. I didn't even get a beverage. I have water.
Mine's kind of fun. Mine's kind of fun. I am drinking. This is
going back to work.
A Chardonnay from Dutton Goldfield. This is their Dutton Ranch Vineyards Chardonnay out of Russian River Valley. And this is like a special Chardonnay that I have from my wine days that I've been cellaring. But it's from 2013. And I just kind of found it in my stash and go, whoops, I should have been drinking this by like 2020. But it's beautiful.
Better late than never. Better late than never.
No, not necessarily in the wine.
Tea.
Not necessarily in the wine world, but it is still beautiful. I was worried that I waited too long, but it's beautiful.
I feel like I need to go run and get a beverage, but I whatever. It's all good. Water's good. I'm hydrating today. I'm hydrating.
I get one later. And this is also apparently National Sundae Day, as in ice cream sundaes.
I've been seeing emails come in all week about people's Sunday preferences, and I don't think I saw a single email come in for team no nuts. I think everybody is team nuts on their Sunday. Is that accurate, Amy?
No, but that was so there were some no nuts, and that just sounded so funny to have you say no nuts. I don't know why it's making me laugh over here. We did have a couple of no nuts, but it was definitely more team nuts. So yes.
Overwhelmingly
definitely.
Team nuts on their Sunday, but more importantly than Team Sunday or than National Sunday Day is Veterans Day. So to anybody who watching today who is a veteran, thank you for your service. And if you see a veteran today, please thank them for their service. So
thank you.
So that is,
I'm still giggling over here like I'm in grade school.
Outshadows National Sunday Day. So
yeah. And a shout out to Brad, Randy, Al, Eric, Bruce, Carolyn, and Rick and Marcy. So
and Dan and Bob.
Veterans Day.
Well, Dad, we have a lot to cover today.
You're probably right. We should kind of dig in and get started because then we won't have to rush at the end. I just like to chat so much.
I know it's fun, but
I do want to interrupt and just say that Cindy is drinking a lemon drop martini, and I wish I had one of those right now. That sounds fantastic.
My Chardonnay has some really lovely mellow lemon flavors in it. I'm not a huge Chardonnay person, but a really nice, well-balanced Chardonnay, especially one that's been chilling for a while.
20 some years ago when I was doing management consulting with a company in San Rafael, I took Sandy out and we actually took a trip up the coast and went to the Russian River Valley. And that was a really nice place. That was just a real pretty place. So
I have not been to the Russian River Valley yet. I look forward to what I know will be my impending travels there.
Well, we're going to talk about how Congress is targeting IRAs. And Sam, we should
Or
be,
how they may intend to.
they may intend, or what they're proposing. Sam, why don't let them know where we got most of this information, or who helped us with this?
Well, as you might be able to see on the screen here, we are a part of Ed Slott's Elite Advisor Group, Elite IRA Advisor Group. Ed Slott is lovingly known or affectionately referred to as America's CPA. We do training with him at least twice a year, and do different webinars throughout the year and get a lot of information from him. I'm actually very excited because when we do our spring training, we will have graduated to his master elite group.
That's right.
Which is very exciting. After, if you had to sit through the tedious trainings, the tedious tax trainings that we did, you would take anything you could get.
So you don't have to, there's nothing like 2 solid days of learning. You would not think you could learn that, there would be that much there. Oh my gosh, there's more rules, strategies, and things than you can imagine. Ed he has a public television show on taxes, and he's re-recording a whole new set. So I think in maybe this spring or something, he's going to go to Rochester and re-record a whole new set of public television. But that's we need to give credit where credit's due. The other thing that's kind of interesting that sort of precipitated some of the rules you're going to see is this gentleman here. This gentleman is Peter Thiel.
The Lord of the Roth.
He looks like he's pretty proud of himself over there.
I know.
He looks proud of himself because he has avoided paying tax on $5 billion. Let me explain. Peter was, in 1999, Peter was joined and was like chairman and CEO of a little startup called PayPal. And in January of that year, he managed to get 1.7 million shares of PayPal. He was able to to put those in his Roth IRA, and he was able to do that because the shares were going. He was able to get the shares at 1/10 of a cent a piece. So getting at that price, 1.7 million shares cost him $1,700, which was under the $2,000 maximum limit you could put into a Roth IRA. And also he was, as many startups, he was only making like $74,000 a year as the CEO, because the startup, they don't pay you much. You get stock options, right? So because he was under 100, he was able to open a Roth IRA. So he opened a Roth IRA, put all these shares in them, and now they're worth $5 billion. And this has caused quite a fuss when people say, oh my gosh, how did he do this? And I'm sitting there, I don't know how he did it, but he's a smart guy, not only helped start PayPal, but managed to leverage it. Years ago, I had a startup where we were doing an internet camera company, and I was going to put the shares in my, it never turned out, but I was putting the shares in a special trust, but I didn't think about putting them in my Roth IRA. That would have been even smarter. So part of it was precipitated by this, and there's 8 rules, and Sam and I will go through them as they come around. We need to tell them what we got to worry about, Sam. These aren't exactly rules yet, right?
Yes, we want to preface all of this by saying none of this is law yet. All of these are proposals that were released by the Ways and Means Committee on September 13th. These are merely a proposal, and if anyone their kids watched or they watched that Schoolhouse Rocks video about how a bill becomes a law. There are a lot of things that have to happen between this proposal and this being enacted as a law. So it could be that we see none of these things. We see bits and pieces of them. It could look completely different than what we talk about today. But in the news, you hear, the IRS is coming for this. They're coming, they're going to do this and that. And it's scary. So we want you to be educated and have a clear picture of what this proposal is. But we just want to be clear that none of these are set in stone, and this could look very different by the time everything's said and done and all the dust settles.
Okay. Well, number one is they're closing the back door.
Close the door.
There's a thing called a backdoor Roth, right?
And to understand a backdoor Roth, Dad, isn't the most important thing to understand the difference between pre-tax money and after-tax money in an IRA, right?
Usually when you put money into an IRA, when you put money in, there's no tax. You don't pay the tax, you put it in, and then when you take it out, it's taxed.
Exactly. That's one of the typical benefits while you're working is you don't pay taxes on it while you're contributing during your working years.
Now, in a lot of 401k plans, it's usually with a 401k, you can pay the tax and you can put the after-tax money into the IRA. So inside your IRA, you'll have both some taxable amount, money that hasn't been taxed and money that has been taxed. But if you do the right things, you can take this money out and put it into a Roth. And that's what's called a backdoor Roth, where you it's really only applies to people that are still working and still earning money. So this is the backdoor Roth, and they're saying, hey, we want to shut this down. Now, I'm a little bemused because in order to do a backdoor Roth, you have to pay the taxes. And generally, you got to be working, and you're really going to probably be in a higher tax bracket, and you're paying the taxes on this money at your highest marginal tax rate. So it seems like it's a good way to get more taxable money from people now, rather than having put all of it into their 401k before tax and have to wait to get the money. But the government has decided to do that. Go figure.
Yep. So just to reinforce this point, for most of you out there, when you think about a Roth conversion, this isn't your Roth conversion. For most of you, the next one is what would apply to you. Most of you, you have pre-tax dollars in your 401k and IRA, not the after-tax dollars. Now, some of you might, but most of you have pre-tax dollars in there. But that does bring us to number two. What about my Roth conversions on my normal IRA or my normal 401k that is filled with all pre-tax funds, money that has yet to be taxed?
And here, we encourage this a lot. In fact, if you're a client, we're always talking about Roth conversions, and we got little calculators to help you figure out what's the right amount and such. The government has said if you have a high income, you're over 400,000 single, 450 married, you're going to no longer be able to make Roth conversions. However, this doesn't take effect for 10 years. So the government's kind of telling folks that are making lots of money, you better hurry up and convert as much as you want to Roth in the next 10 years, because it's going to go away. And I'm sitting here now, in this case, they're kind of saying you need to pay taxes now and at probably a very high rate because you're making 400,000 plus. So here they're trying to get you to convert to a Roth and pay the taxes. And especially if you're making lots of money. And who knows, in 10 years, they may say, you can still convert anyway. But it's just a way, I think it's a way to get people to pay more taxes at higher rates, if you will. That's number two.
But if you are, as we do, we talk about Roth conversions all the time on our Happy Half Hour, very often. And if you are not at risk of having a taxable income of 400,000 or 450 married, then you can ignore this. This would not apply to you. And if you do, you've got 10 years to hurry up and
I don't know if we have anyone that's truly retired that's bringing in 400,000 a year. Most retirees don't have a taxable income that high. Some people we have working that may be doing that, but not people that are retired. So it's not really a big issue for us. This one we call the keep it under 10 million rule.
This is where they've come up with the term mega IRAs.
Mega. They're saying if you have over 10 million combined of your IRAs, your Roths, your 401ks, and you're still bringing in over 400 or 450 a year, then you're no longer able to make contributions to your Roth or traditional IRA.
Now, what's interesting is that there wouldn't be no limitations on contributing to your employer plan if you were eligible to contribute to an employer plan. However, if you look at number 4, if these two things are true, you have at least $10 million in all of your qualified accounts, and you have 4.5 or 450,000 of income, they would require required minimum distributions. And now these required minimum distributions are separate than your normal age 72 required minimum distribution.
These are like you got too much required. And if you have over 10, what is it, over 10 million, what is it?
It's 50% of everything over 10 million. So if you had 10,500,000, then your RMD would be 250,000 you would have to withdraw.
And then there's the second one?
Yeah, there is a second one. So I guess I don't know if there's a technical term, but if you had a mega IRA.
How big is that?
20 million.
20 million.
If your IRA, Roth, and retirement accounts combined exceed $20 million, your RMD would be 100%. You would be required to withdraw 100% of the funds over $20 million.
If somebody out there, has IRAs and such over 10 million, come see us. We'll help you strategize this problem. Just as an aside, Warren Buffett has $20 million in his Roth IRA.
Oh.
But also, one of his directors, one of the people in his company, has a $264 million Roth, and there's another one at a company called Global Capital has 252. So I kind of did a survey to see how big are those IRAs out there. And so there are some people that are going to be this goes through, they're going to be, hurting, or they're going to be getting a lot of income one year. So
we'll see
I think if this passes, the lesson is try to keep your IRA's totals under 10 million. I guess if you're not earning that much, you're okay too. It's kind of a hoot.
Yeah.
This one actually does worry us because we have people that could be affected by this. Although Ed says he doesn't think it's going to be passed because many people in Congress are affected by this.
Mm-hmm.
And that has to do with limiting investments for accredited investors. Now, accredited investors, if you have over $1 million in investable assets, and then there's an income thing too, but let's say you have more than $1 million, you have the opportunity to invest in some strategies of private equity, hedge funds, things that people with less than that money can invest with, because those things have more risk, less liquidity, and the government says, hey, we're not watching them as close, there's more problems, so we want to be sure you're rich enough that you can invest in them. We actually have, and recently have added a number of private equity strategies and a couple of hedge funds that accredited investors can go into and may want to put IRA money into, and they're saying, well, we may limit that and may not let you do that, or may make you take it out. But again, it's not likely to occur because again, a whole lot of people who vote on this are already doing this. So this one though is one that it would have some impact. What's next? Oh, odds and ends. The odds and ends are kind of a little odd things. One is there's tighter self-dealing rules. When Thiel put his own company into his Roth, he was kind of self-dealing. He was investing his own company into his Roth IRA. And they're kind of saying, we're going to clamp down on that. You can't start a company and put it all in your Roth or your IRA. The statute of limitations is just like it sounds. If you cheated right now, if you get past 3 years, you're okay. They're going to say, let's make that 6 years. And there is a tightening the rules for what's called disqualified people. Let's say you had an IRA or a Roth and you said, I'm going to take $100,000 and I'm going to lend it to my brother or my daughter or whatever, some family member, take a note and get interest on it, or invest in the real estate that they have. That's a disqualified person, and you're not allowed to do that. For the most part, these are in place now. Nor could, for instance, I borrow the money as your advisor and your fiduciary. I would not be allowed to borrow the money from your, not that we ever would, but the law prohibits that. So that's what that number 8 means. So those are the odds and ends here. So with that, we kind of got through that in a good short order. That's kind of the where we are now. We have a line drawing here in a minute, don't we?
Yes, we do.
And one thing we should mention is, if, you know, we always like to offer times, a lot of times people on the call, especially clients, know they can call us anytime, but if you're a visitor here or you've been invited and you have something you want to talk about, whether it's Roth conversions or income or taxes or anything, one simple way to do it is to go to the website www.carolina15.com, Carolina 15. And there's a little calendar there. You can get on our calendar and book a 15-minute phone call, no cost or obligation, just to talk about anything you might want to talk about. So just write down Carolina 15, and you know, a lot of people have just things that worry them, and we can get you some advice. So. Okay.
All right. Well, I am very appreciative for Mr. Ed Slott for helping condense all of that information into something that was you know, much more palatable for us and hopefully more palatable for you guys to comprehend. We had spent some time researching it online, and you know, this, you know, I think that they did a really nice job of interpreting that
Yeah, they actually have Ed has a staff, a little think tank of
Experts.
basically tax lawyers that know all the tricks. The nice thing is this being part of their group, when someone has a question that we can't answer, something tricky, we have experts we can call and get advice on how to handle it. So that's always been a good thing. So,
Mhm.
okay.
Well, all right, Dad. Well, you're right. I guess I could have let you banter for a minute or more. But you know, we're pushing up here against the hour. I knew that we had a lot to go through.
She keeps her dad in check here, you know? So.
I thought that you were gonna have more to say about the $5 million Roth, to be honest.
I could have told
Yeah,
more.
I was expecting a little more, but it's okay. It's good.
I trimmed out how it went from 5 to there was a whole long banter of stuff in between, but basically it was smart enough to put it in there at $1,700 and grow it to 5 billion, and you know.
So I guess it was either we were gonna finish now or we were gonna finish like 10 minutes from now.
Yeah, that's it. And you know, we didn't have any like funny artwork that we could like, you know, make fun of or any of that. You know, there was no funny
Yeah.
little cars you were drawing or
Oh,
little
it's because
people.
I made the PowerPoint today's and I made it pretty.
Oh, yeah,
He's
you
a
did a
lot
good
more
job.
playful than I am.
It was good. I enjoyed it.
We seldom run over. We seldom run over. So,
Okay.
okay.
So I know that most people have probably heard my spiel a million times. But for those of you who may not have, every week we give away 2 bottles of wine as a raffle. And to enter my raffle, all you have to do is we have like a Facebook event every week, and just click that you're coming to the Facebook event. Or if you sign up for our mailing list, we send out a few emails and let you know what our topic is going to be. And if you respond to those emails and just let us know, you know, hey, enter me in the wine drawing, or if you just respond in any way. Sometimes like this week we asked about, you know, if you like nuts on your sundae. If you let us know if you like nuts on your sundae, your name is in this hat. If you forward that email to a friend, you got to let us know, but we'll give you an additional entry. Or if you share the Facebook event with a friend, we'll give you an additional entry. And so our winner of 2 bottles of wine shipped directly to your door, and we use a local bottle shop. We use Fermental. They are currently located in Ogden. They're going to be moving to downtown Wilmington. I know Amy's really sad about it, but our winner.
I'm so sad. So sad.
I know. They'll be closer to me though. But our winner this week is Maureen O. So congratulations.
Maureen, congratulations.
You are our wine
Congratulations,
winner.
Maureen.
And what's our subject for next week?
Oh, I said
Next-
it last week, but yeah, it's like the sucker
Or
punch.
next week, yeah, next week we're still, Thanksgiving's the week after.
Yeah.
Next week, we're going to be talking kind of just an overview about risk.
Yeah.
It's like risk is what you don't see coming.
Yeah.
Yeah, they're going to show you where the real risk lies. So should be good.
Yeah. I like the title of it, which I guess I shouldn't spoil because I spoiled it last week.
Say it. You can say
Yeah. Right. And it's about like sucker punching your savings, and that's all we're gonna say because I spoiled it last week.
And we're going to actually talk about the probably the most famous sucker punch in history.
So sad. So
Yeah,
sad.
it is sad.
Yeah.
But
Don't get sucker punched. Nobody likes that.
So come by next week and we'll cover all that.
Yes. Yes.
With that,
5
cheers,
o'clock on the
everybody. It's
nose.
5 o'clock,
Have
man. We are
water.
right on time as usual. We'll
Yeah.
see you next week for the next happy half hour. Tell your friends. You can always watch all of them on our YouTube channel. Go to Carolina Retirement Planners. Go to events to happy half hour. They're all listed. They're easy way to
They
get to.
are. Cheers, everyone.
Bye bye.
Cheers.